We have a big week this week in the markets. We need to talk about it. I am Dr. Stock, Doctor of Education. And do you know what writing utensil swine write with? A pig pen. This is the first week of the new year, first week of the new month, so we have lots of jobs data coming out, and I'll talk about why that's important in this video. I'll also do some technical analysis on the indices and also talk about a Bitcoin update with some other altcoins that are out there, and then I will also tell you where you can see how I'm playing this market, about my options course, and about the bread recipe course brought to you by Stock Mode that I'm lucky to be a part of. In the meantime, let's get right over into it. So, we are currently under market conditions where a soft landing is the thing that we're currently operating under. So, operating under that assumption of that soft landing, that means a few things. One, that GDP remains strong. That includes corporate earnings that tell us, that are going to indicate to us that GDP could most definitely stay strong for us. Mind you, I believe we get that advanced estimate on GDP toward the end of January, so we'll be watching for that one. That's going to be absolutely huge as a catalyst. We also have inflation numbers to pay attention to as well, because we want to see that inflation is continuing to disinflate. So we have prices that are slowing down even further in their rise. We need to be careful that we're not seeing deflation. So for a soft landing, high GDP, low inflation, we also want to see a strong labor market come out of that. We want to see the labor market remain strong, and that's huge for this week with the economic reports that we have coming up. So that's mostly where we're focused. And then we also have consumer sentiment continuing to increase. So those are the factors that can contribute to a soft landing. We need to keep watching for those, keep moving on with that, because that can tell us that the markets can continue upward for a little while longer. So that's exactly what we need to see. With that said, let's move over to some of the catalysts that we have out there. So let's move over to the economic catalyst. So we kick things off 9:45 on Tuesday, S&P Global Manufacturing PMI. We want to see that stay above 45. And so this takes a bullish perspective on the markets, meaning that when I say that we want to see above 45, that would be where we could still see either neutral or upward pressure on the markets due to that. Below 45 starts to get a little bit scary for this, because that starts to point to like 2008 times, or even when we back in March of 2020 with the pandemic hitting and everything shutting down. That's when the last time that we saw this below 45, which I think would be significant downward pressure on the markets. So otherwise, not the biggest catalyst that we have, but it's worth paying attention to. Then moving on to Wednesday, we have ISM Manufacturing PMI. So for that one, we want to stay above 45 in order to remain in the bullish direction to see further either sideways or upward pressure on the markets from that. Below 45, we start to get into the 2020 or even 2008 times with the Great Recession and pandemic. So we want to be watching for that we stay above that 45. Below 45 is going to be significant downward pressure. For JOLTS, we want to see this number remain up above 8 million. Below 8 million could be downward pressure on the market. So we want to be paying attention to that as well. So you want to pay attention to that number around that 10 o'clock hour, because if you are day trading, that can significantly impact what we see during the day, especially if the market runs up to that 10 o'clock hour and then now comes out soft. We could plummet from there, and that could be a significant day trading opportunity. And then that could also tell us a little bit more about direction of the markets from there, if we're going to come off the peaks that we have and we're going to retest some supports, or if we're going to continue higher if that number comes out strong. So absolutely be watching for that. And then we have FOMC minutes at 2 p.m. That day, which what we want to see for that one, we want to see further confirmation of the Fed's dovishness coming out in order to remain bullish for the markets as well. And then I also have indicated in my notes here that we want to watch for a low close for the markets on Wednesday, and that's because of what we get prior to market open on Thursday with ADP, so private employment change. For that number, we want to see that come in north of 100,000 in order to remain bullish on the markets or have upward pressure on the markets. Downward pressure comes in that below that 100,000 mark. So we want to be watching for that one. Initial jobless claims is the bigger of the two, in my opinion, because this goes into that whole soft landing scenario, and we want to see continued tight labor market conditions, that as soon as we start to see cracks in that armor of soft landing, that's where the markets start to fall apart. So that's something that I'm watching for. So for initial jobless claims, we want this number to be less than 233,000, because that was the highest number that we've had recently, and we're to be watching for that. Going greater than 233,000 for initial jobless claims could scare the markets, that what we're starting to see is some softer labor market conditions, and instead of pointing to soft landing, pointing more towards the recessionary side of things, starting with higher amounts of jobless claims. So we just need to keep on watching for that. I think that's going to be huge for us. Also, challenger job cuts, I forgot to mention on that one. We want that to stay below 45,000. Going up above 45,000 could be downward pressure on the markets. And you can see Trading Economics right now has their forecast at 63,000. So we're going to watch and see what they have for that one. Moving from there, into Friday. Friday, we have non-farm payrolls. That's going to be absolutely huge for us. And so that means that for Thursday, if we're sweating non-farm payrolls, and we can see how the market is feeling about these jobs numbers based on how the market reacts leading up to them, by the way. So if the market is showing any fear, uncertainty, and doubt leading up to those times, we can see that the market's sweating those numbers coming out. And so that would point to the impactfulness of those numbers, which I think they're going to be highly impactful this week. I think this could be a very volatile week for us, especially coming off of last week's lower volumes that we had in the indices and in the market. So non-farm payrolls for this one, we want this to come in north of 200,000. So more jobs added would be better. Upward pressure for the markets, because that means we're continuing tight labor market conditions. Below 150,000 is where things start to get really scary for us. So we're going to have to watch for that we want to remain strong with those numbers. And like I said, below 150,000 could be significant downward pressure on the markets. We absolutely want to watch for that. And then we also have unemployment rate, which is right here also at 830. And what we want to see for that is we want to see the unemployment rate stay at or below 3.7%. If that ticks up to 3.8 or 3.9 like we see in the consensus and in the forecast that we see over here, that could be something that rattles the markets, especially if we go from 3.7 straight to 3.9. Not great for us, because unemployment rate, as that changes, it changes very rapidly, not linearly. So we would be watching for that one. Stopping at 3.8 might be kind of bad, but not so bad. Jumping from 3.7 to 3.9, I think, is going to be something that's going to rattle the market. So we'd be watching for that one. And then we have ISM services, PMI, that we want to see continued expansion in that. So numbers above 50 is what we're looking for, according to the forecast that we have there. So that's what we have coming up in the economic reports that are out there, and my interpretation of those numbers based on what could possibly happen and how the market could react to it. And so, as I mentioned before, if you're following the bread recipe stuff with the moving averages, the exponential moving averages, I should say, Bollinger Bands, and bringing in the RSI, or if you're interested in that, the link for that course is down in the description, the stock mode technical analysis course. And I'll talk more about that later. In the meantime, I want to get over to the charts themselves. So let me bring these up here. And I don't want to talk about Bitcoin yet, but I will soon. So I actually deleted off a lot of the lines that I had on here for support, resistance, and everything that we had on there. And so I actually did have the rising wedge mark that was on here, and we did break out of that. So now we're starting to round that corner. It is possible that we settle downward from there. But this week is big for employment numbers, for jobs data, and we're going to be watching for that. And like I said, if it confirms tight labor market conditions, generally speaking, upward pressure, if it instead refutes that and starts to show a lot of loosening, softening in the labor market, that can start to point more towards the recession side of things, in which case we come down. And I think these are two critical support areas that we have, by the way. So one of them is right around 465, and the next one down below that is right around 456-ish. So those are the two numbers that I'm looking for should we continue back down to support. If we keep on rising, I think 480 is that next number that we could hit moving upward from here. So where did we close last week? And this is the weekly chart, by the way. Last week we closed at 475, so 1.25% would be a very reasonable number to hit. And it is possible through the month of January, if all the stars align, if we hit everything, that we have the tight labor market conditions, we have great inflation numbers coming out in the following week, at the end of the following week, and then we also start to hear great things from corporate earnings, and we also have strong GDP numbers. The S&P, what we could see here in the SPY, we could have that 500 in there in January if all those things go well for us. So if those things start to fall apart, then we're going to start falling short of that number. And so we'll have to find out where our supports are from there. I think these two supports that we have are absolutely critical. And I think 475 is another one of those numbers. That's one of those line in the sand numbers. So looking at what we have for the RSI, we're still dabbling right at that overbought territory on a weekly basis. And if we go down to the daily basis to see what's going on, we are coming down off overbought. Prices are rising, momentum's falling. That can be seen as bearish divergence. It is possible that we come back and retest these. That can be refuted. The technicals can be wiped out by the economic data that we get, or they can be confirmed by the economic data that we get, and then we get a pretty strong pull down. So we're going to have to watch for those things. Be prepared for either one of them. Moving on to what we see in the NASDAQ on a weekly basis. We're in the overbought territory for this one. And you can see we're significantly above the 200, which is down here, this yellow line, and the 250s. One of the, let me not cause confusion, the 50 EMA and 50 SMA are right near each other here, and we're significantly above those as well. And you can see we're starting to get smaller candles here as the prices are showing less of that upward movement. We're starting to round off on a momentum basis. We're not seeing on a weekly basis the same divergence that we saw on the daily basis that we have. Here's the long-term trend, hasn't turned around yet. Shorter term trend that we see right here, prices rising, momentum falling. It is possible that we do start to pull back to the different support areas that we have on this. So if I were to put some lines on here for support for QQQ, what I would do is I would look to see historically where we have those supports. That's going to be one of the most telling things that we have. Let's go back out to the weekly chart here, and we can easily show this. Right around 403 is one of those numbers that we're looking for. And because we're so darn close to that round number of 400, I think that that's also worth paying attention to. And we'll put that about there, even though it's a little bit off from that number. And let me go down from that one more time. I think 396 is actually, let me see where 396 is. There we go. So that's the support that we can be looking for QQQ. So people are going to watch this and they're going to say in the comments, so you're expecting it to drop this week. And I would say that if the economic reports don't inspire us, I think absolutely we could see a drop this week. That doesn't mean that it wipes out any bullishness for January. I already talked about the conditions for bullishness for January, that we need to see numbers that affirm the soft landing scenario. That's what allows us to continue upward. So that's exactly what I'm looking for. So you can go back to the beginning of this video and watch and see what I said about that. So where did we close the week on this one? We closed the week at 409.52, so almost 410. That means 410 can act as significant resistance for us. So we need to be watching that number above 410. We can start to put on several percent onto this one. So for this, seeing a number like 420 pop out, or even seeing 430 pop out by the end of January, that really depends on a lot of things. Like I said, that's an all the stars aligned scenario that we would see another several percent on top of this, where we see, again, strong GDP, great inflation numbers, strong jobs data, consumer sentiment also being very positive for us, and then corporate earnings also saying that there's a lot of growth ahead, and that they don't reflect a lot of uncertainty. So keep that in mind for further bullishness from here, especially rampant bullishness throughout the month of January. It's going to take a significant amount to get there, and we're going to have to keep on threading that needle if we want to see it happen. So stopping real quick by the Russell 2000, we're actually at a pretty critical time where we started to pull back. You can see over here, and this again is the weekly chart that we're looking at, 209, 210. That's going to be rough for us. Actually, I'm sorry, 207 is the actual number that we would be looking for, because we got rejected over here off the resistance that we have over here. So instead of just pointing, let's put a line on there. There we go. That's about the number that we have. That's probably a little bit soft from that. So that was about closer to 206, but I say 206, 207 is where we're looking for. Besides, it's an area of resistance rather than a line of resistance, even though I put the lines out because that makes it just easier to pay attention to, easier to see. So for this one, again, we need that stars aligned scenario in order not to come back to what we'd have for this would be 200 or even down below that, because we closed right at about 200, right around 197, and below that is about 190. So for the small caps, we're going to be watching for those, and I will say that they're probably going to be one of the first to suffer in a recession, but if we come out of that with a lower interest rate environment, they're also going to have a glorious time from that as we move over from a tightening cycle to more of a relaxed monetary stance, even into quantitative easing. I think that then we would see some really significant outperformance from the small caps that we have right here. And if we continue under soft landing scenario, this is one that can still continue to outperform what we would see from the S&P and from the NASDAQ 100. The link for Patreon is found down in the description. You can sign up, join me over in the Discord, see my buys and sells, and join my community. And you can see how I'm playing these markets as they come along to us. And then also my options course, if you want to amplify your portfolio through the power of options, that course is over there. And it's made for the complete beginner all the way up through advanced trading strategies, coming soon at the end of that thing. And then moving on from there, we also have for the technical analysis course, if you're interested in the bread recipe. And if you've watched StockMo's live streams with the bread recipe, it shows pretty much on a daily basis how you can go in and do day trading and be consistently profitable with that using the bread recipe. And while we can't guarantee profit, I can tell you that people who are using it are experiencing a lot of success. And there's also a Discord that goes with that you can join that community and then talk about how you're using the recipe and fine tune your approach to that. The link for that is also down in the description as well. All right, let's get back to the charts. I want to talk about crypto. So moving over to Bitcoin, what you can see here is that we still are in this symmetric triangle pattern. This is a trend line right here is a much shorter term one that we see, but we do want to break up over that because that can give us room back up to the top trend line. We want to pay attention to which part of that we break out of. Thankfully, we had the 200 period moving average as support here. We fell at the bottom of that, returned back to it. We're back on trend for this one. The Bitcoin ETF decision can happen really anytime coming this week, so we could possibly see a drop in an early sell the news sort of scenario. But then by the 10th of January is when we should hear that final decision for a spot ETF for Bitcoin. So that would actually open up a lot of trading opportunities for Bitcoin, which could be a very positive catalyst. So we could possibly see this price start to tank as early as tomorrow when we start looking at that, or we could even see it because it is crypto and crypto's going 24/7. We could possibly even see that tonight leading up to the market open tomorrow. We're going to have to watch for that, but do watch these trend lines. I've been talking about them for a while. You can see we're still operating on those trends that are there. And should we break to the north of this thing, we just got to get over about 44.4, 44.3 it's looking like. Breaking above that is going to be very bullish for us, leading up to that decision that we get. Now, if that decision gets refuted, this thing's going to drop like a rock. If that decision is that we're going to put in place so that we get approval for the spot ETF, this thing's going to take off like a rocket. At least in the near term, I believe it's going to be a very positive thing. And actually, I have myself positioned after Mara's drop. I jumped into that. MARA is the ticker for that one as one of the Bitcoin miners that are out there. And that one is going to be, it's going to be a coin flip for us depending on what we see this week coming up or between now and the 10th of January. So I'm going to be watching for that. Ethereum still hanging out. It actually popped up out of its top trend line, and then you can see it actually starting to get pinched between the trend line and its line of resistance that we have right here, right around $2,300 per share. We have $2,500 to the north of that, and with the spot Bitcoin ETF approval, then it's most likely within the next 12 months after that, we could even see further approvals for other crypto that are out there. I think Ethereum would be one of those next ones that are in line. I think this would be a big favorite, a big push. And so I think it would be a big catalyst should Bitcoin get approved that we would also have the Ethereum ETF approved as well. Check out Avalanche. We got to bounce off this support that we have right at about $38, $39 per AVAX. We need to watch for that one in order to continue upward from here. If we break down through this line, we have room all the way down to about 34.50, and then we have the 50 period moving averages here as support as we look at them. Solana is finding support right around $100 per SOL token. And so for this one, should that support continue to hold, we can come back and revisit about 115, 116. Last time we peaked out right around 126, and we do have room up above that up to about 137. And this blue line here is that trend line for support that we have to the downside of this, and even below that, should we break through that, then we get caught at about 85 as the next support, with really heavy support coming in at around $75, $76 per SOL token. All right, let me wrap this thing up. So what do we have for the markets coming up? Well, the markets have been on a tear recently. We know that. Jobs data is going to be huge for us, and this is a huge week for jobs data. So we want to watch for that to see if we get continued bullishness or if we come back and retest support. And we need to watch for what's going on, the sentiment around the soft landing scenario, if that's one that's going to persist or if it's one that's going to give out and lead way to recession, because that would be something that would be a heavy drag on the markets, and then we start to really fall down through those near supports that we have anyway. So be on the lookout for those things. I know that I am, and I'll keep on coming to YouTube and bringing those to you guys. And then also with crypto, that spot ETF decision that we have for Bitcoin, we need to be on the lookout for that. Most likely there's going to be a sell the news event before we even get that decision, and then the decision itself is going to be that next catalyst that either we press down harder or we just pop up through the top of this thing and go wildly bullish for a little while, because I think that can also happen. And I have a little bit of capital out there right now for that coin flip that we get, and depending on what we see in the price action, I'll change my plan accordingly if necessary. If you want to join me over at the Patreon and be in my Discord to see my buys and sells, that link is down in the description. Also, if you're interested in the bread recipe, learning how to bring technical analysis to help bolster your portfolio, that link for the stock mode technical trading course is also down in the description as well. Thank you guys very much for watching this video. As always, I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and we'll see you in the next video.